Good afternoon, traders. We are at the midpoint of the trading week, and the scoreboard shows mixed signals with the market pushing higher while volatility quietly edged up. Welcome to the VIXShield Daily Market Summary, Market Close Recap for Wednesday, April 22nd, 2026. These signals and insights are for educational purposes only and are not financial advice. Trading involves substantial risk of loss. You can lose more than your initial investment. No live trade execution. Signals only. Past performance is not indicative of future results. In this episode, we review exactly what happened today, why the entry gate stayed closed, and what active traders should be watching as we head into the second half of the week. The S&P 500 closed the session at 7,138 after a solid gain of roughly 1.05%. That move continued some of the momentum we noted on Tuesday, yet it lacked real conviction across the broader tape. The CBOE Volatility Index, known as the VIX, settled at 18.79. That is up 4.7% from yesterday's 17.94, and it sits just above its 5-day moving average of 18.59. The slight lift tells us implied volatility is stable for now, but it is paying attention. Step back for a moment and look at the term structure. The 3-month VXV sits at 21.11, leaving a spread of 2.32 points in contango. Contango simply means longer-dated volatility is priced higher than near-term volatility. For iron Condor traders, that is the calm, normal state of markets, and it generally supports premium collection strategies because time decay works in your favor while the market expects volatility to stay contained. Cross-market color painted a complicated picture. The dollar index rose 0.5%, suggesting some safe haven flows. Bitcoin climbed over 4%, and Ethereum gained 2%, which diverged from the modest equity rally and hinted at risk-on appetite in crypto, even as stocks digested renewed tensions between the United States and Iran. Gold fell 2%, while crude oil jumped more than 10% on supply concerns. Taken together, these moves show markets are still searching for a clear narrative this week, and here is where it gets interesting. Headlines today told a tale of cautious optimism colliding with geopolitical nerves. One wire noted the Dow popped 365 points, while the Nasdaq touched another record peak. Behind that headline, you saw rotation into technology and industrials, with names like Boeing and GE Vernova leading the charge on renewed optimism around infrastructure and defense spending. Yet Reuters reminded us that Wall Street closed slightly down in late trading on renewed tensions between the U.S. and Iran. That flare-up in the Middle East is exactly the kind of event that can lift volatility fast, which helps explain why the VIX refused to roll over even as stocks climbed. Meanwhile, the MU updates, counting the days of rate cut expectations under the current administration, kept rolling out. These serve as a steady drumbeat, reminding traders that monetary policy remains the long-term backdrop, even while day-to-day headlines swing between risk-on rallies and risk-off jitters. Economic calendars this week still hold important releases. The Chicago Fed National Activity Index and the upcoming Fed interest rate decision are the numbers that could change everything. They sit squarely in the second half of our trading week and could easily push the VIX through key levels we have been watching since Monday. Now let us look beneath the surface at volatility. The VIX reading of 18.79 lands in that 15 to 20 caution zone we talk about often. It is elevated but still below 20. Realized volatility over the last 10 days sits at 14.24%, which remains well below the implied level and confirms that markets have been pricing in more uncertainty than they have actually experienced. Our expected daily range indicator came in at 1.29%. The entry gate was not met today Because the VIX sits above the 20 threshold in our primary rule set. That single filter, combined with the forward-looking temporal reading of 7.28, kept the entire board on hold. And that, frankly, is exactly the kind of discipline we design these rules to enforce. Now the strategy insight for today. The place or hold decision is hold. The specific rule that drove it is straightforward. When the VIX is above 20, all tiers are blocked. Even though today's actual print landed at 18.79, our signal engine carried forward the caution level from earlier in the session, and the gate stayed closed. This is a classic mid-week checkpoint where Monday and Tuesday signals are stress tested. Theta decay on any open positions from earlier in the week continues to work quietly in the background, but we do not layer on new exposure when the volatility filter flashes yellow to red. VIX at 18.79, elevated but still below 20. Conservative tier is green, safe to place. Balanced is yellow, tradable, but size down if you are cautious. Aggressive is red today, blocked per our VIX rules. We do not push the aggressive button when volatility is running this hot. Had conditions been fully met, the RSAI verified strikes we would have evaluated on the conservative tier looked like 6,970 put credit spread and 7,245 call credit spread, targeting a net credit around 65 cents. The balanced tier would have been 6,990 to 7,225, and the aggressive would have sat even tighter. But because the gate was not cleared, we leave those structures on the drawing board. This is an educational example of how the entry rules protect capital during unfavorable conditions. Our 3 layers of ALVH protection remain fully active in standard allocation under this normal contango regime. The theta time shift mode is forward, extending target days to expiration to 7 to capture additional vega while we wait. Every hold day that avoids a losing trade is a win. Discipline lesson from today is simple. When the VIX hovers in this caution zone and the entry gate stays closed, the correct action is to do nothing. Impulse traders often regret forcing positions on days like this. We have seen too many cycles where respecting the hold preserved capital for the higher probability setups that follow. Looking ahead, keep eyes on tomorrow's economic releases and any further developments out of the Middle East. Watch whether the VIX can settle back toward its 5-day average or if it breaks above 19. Those will be the signals that determine if Friday brings a placement window. If you found today's summary valuable, share it with a friend. Both of you will receive 14 extra days of free trial access to the full VIXShield podcast and signals. Your personal share link is waiting for you in your member dashboard. This market summary is brought to you by VIXShield, your protection against daily uncertainty. These signals and insights are for educational purposes only and are not financial advice. Trading involves substantial risk of loss. You can lose more than your initial investment. No live trade execution. Signals only. Past performance is not indicative of future results. Today is a hold day. The VIX entry gate or EDR filter was not met. No new iron Condor positions should be opened. This is an educational example of how the entry rules protect capital during unfavorable conditions. This is VIXShield, your daily protection against market uncertainty.